Hello everybody and welcome to a discussion of the TrendSpider Use Case, the Chande ARCH indicator, and the Nvidia Reversal of March 8, 2024. A quick look at our disclaimer. Please review it so that you understand the limitations of the current discussion. This is the daily chart of Nvidia plotted with the ARCH indicator, and this is the big reversal of March the 8th, Friday. And let's see whether we could have anticipated this reversal using the ARCH indicator. What is ARCH? ARCH is the adaptive regression channel. It automatically draws a price channel on a chart. It uses linear regression for the center line and then uses volatility to add two more lines on either side at 1x and 2.5x by default. And the idea is that the lines contain the price action. These are the default values for the ARCH parameters. The default regression length is 50 candles or 50 bars. The delay is 0, i.e. it uses the data up to the most recent candle. The inner band multiplier is 1x and the outer band multiplier is 2.5x. This is a visual indication of what the parameters do. This is a daily chart of ANF or Abercrombie and Fitch and Company. The regression length is the number of candles or bars used in the computation. The mult1 is the multiplier for the inner bands, and the mult2 is the multiplier for the outer bands. An important feature of the ARCH indicator is the ability to set the delay, that is how far back you want to push the ending bar. Typically you would end on the most recent available candle, but you can of course push it back so that you can see what the trend looked like a few days ago. We are back to the daily chart of Nvidia, and we've plotted an ARCH regression channel with the parameters 50, 1, 1, and 2.5. This means we had a 50-day regression. We had pushed it back with for 1 day, so it ended on Thursday, the day before the reversal. And then we used the channel tool to draw an extension of the ARCH channel. So we can see that we were well outside the band on Thursday when we closed, and then we opened well outside the band, and the reversal was a distinct possibility because we were so far outside the band. Observe that for most of the previous 51 days, prices had been contained within the 1x channel, and when it went outside or fell below the 2.5x channel just before earnings, the stock rebounded to close within the 1x bands because we had an earnings report that pushed the markets higher. So just a closer look to show you that we closed outside the upper 2.5x band on Thursday. We opened even further above the band and then reversed, and the low was just above the trend line extension. So if you were anticipating a reversal, you had a target for the low, which would be in the area of the low 2 days ago and a little bit in the area of the trend line extension. This gives you a calibration for how high the prices were before reversal. I've plotted the standard 2.5x bands and the 4x bands. So typically it's not useful to go much beyond 4 because this is a really large number. Not that the market can't get outside it, but the probability of a reversal gets higher. Probability of reversal gets higher as you go outside the 4x bands. On this chart, we have plotted the default values of the TCR channel, and we have the 14-day RSI. So you can see that when we had prices above the upper band, we also had RSI above 80, which is a very high value for RSI, meaning that a reversal was possible. But notice that we were above 80 for a long portion of the trend when the prices were contained within the 1x and the 2.5x width channel. So using the ARCH channel in combination with the RSI would give you additional confirmation that a reversal was possible. Here's a long-term view of the daily price action for Nvidia, and we have used the Fibonacci range extension to understand where we were in terms of the price action. And the base range we have used is the October 22 low and the August 23 high. And you can see that when you plot the extensions, the prices had risen above the 2x Fibonacci extension. So again, from a trading perspective, every time you are around or above or near a Fibonacci extension, you tend to get significant price action. So this would be another clue that we are in the general area where the prices might meet resistance because we are at a key Fibonacci extension level. This is a daily chart of Novo Nordisk NVO, and we have plotted the 1x, 2.5x, and 4x bands. And here prices have risen above the 4x band before reversing. Another example of the 4x bands or even the 2.5x bands acting as resistance when prices move outside these bands. This is a counter example using ARM or ARM holdings. The outer bands here are 4x, but when the ARM earnings came out, prices rocketed above the 4x and stayed there for several days. So just a reminder that just because prices rise above the 4x band, that does not guarantee a reversal, because you could have some really important earnings information that could drive a substantial repricing of the stock. This is daily data for the S&P 500 index, and we plotted the ARCH indicator with the default values and a few days of delay. And you can see that because there are a lot of stocks in this index, it tends to be well behaved and well contained within the bands of the ARCH indicator. We found resistance and support near the edges of the band, and you can draw an extension if you want to project price targets or future support and resistance. To summarize, the ARCH or adaptive regression channel automatically draws a mathematically rigorous channel on the price chart, and action well outside the bands could lead to reversals or consolidations. It's a possibility, but not a guarantee. Thank you for watching.